Are you thinking about buying a home? Well, today we've got a couple of topics that we'll be discussing, saving tens, if not hundreds of thousands of dollars. And I'll be joined by my co host, Chase Hodgson, to discuss each one of these items in fairly good detail so that going into the buyer's market, you'll be well armed with ways to approach the home buying process. With that, we'll bring Chase in. Chase, how are you doing today?
Good, Jared. How are you, man?
I'm good. I'm good. Real good, actually. This one I think is going to be a great topic for our home buyers. A couple of topics we've touched on in the past, but we wanted to consolidate them down into one episode and just cover them with them. So we appreciate you coming on.
Yeah, absolutely. Always fun to be here, man. Always fun. Great way to spend 30 minutes, right? If we can keep it to
If
that.
we can keep it to 30 minutes, we'll give it our best. Yeah. So let's talk about a couple of housekeeping things here real quick. My name is Jerod Lee. I'm the associate broker and team lead here at MHC Realty, also known as My Home Connection. Our sponsor for today is our perfect home buying process. We've spent the better part of the last couple of decades developing it out to make the home buying process more efficient, more effective, and save you some money along the way. We've got a lot of different information we can provide in the way of relocation lifestyle guide, reports that you would need, no obligation consultations, and podcast series to provide all the info about the home buying process. You can certainly reach out to us anytime to discuss how you can take advantage of this. We are partnering with Chase at Summit in regards to getting 500 up to $500 off on your appraisal and up to $500 on your home inspection. So feel free to take advantage of that. But with that, we'll bring Chase back on, and I guess there's a couple things that are happening that are unique. I said once in a generation. Certainly once potentially in a lifetime, and that is the first one we'll talk about is this extremely low interest rates we had during the pandemic and what that means to home buyers that I think could be easily missed in the way of assuming loans. We've talked about in detail why that's not a heavily discussed topic or certainly heavily pursued, but I think it needs to be a hot tip topic of discussion. Can you give us just a brief insight from your the lending perspective about the tremendous benefits for a home buyer in assuming a pre-existing loan?
Um, yeah, I mean, timing is everything, right? Like, it doesn't always make sense. Right now, with where interest rates have gone, and as you touched on, where they've come from, if you're down at 2.75 or 3%, and now you're looking at anywhere from six and three quarters to seven and a half, that's a huge difference. It's more than double the interest, which is, it's affecting a lot of people as far as affordability on a monthly payment standpoint.
Yeah,
And so,
we've had a lot of people
it, it,
priced out.
right, yeah, absolutely. And so that this, the previous environment that we had creates an opportunity maybe for some folks that aren't. Now there's obviously some caveats to that, because depending on what they owe on their loan and what they're selling their house for, you have to come up for the difference or qualify for a second, to cover that. Not not all loans will let you do that either, so there's a lot of caveats as far as assuming the loan and the type of the loan. Pretty much, the standard is that Govy loans, USDA, FHA, VA are the ones that are assumable. And so, sometimes it's difficult coming up with that cash difference, to get that done. But people knowing that opportunity is out there is good, because it might create something where you can get in, for a much lower monthly payment.
Yeah, and I think that's the important part is to know that that potential is there. So instead of being discouraged thinking you're completely priced out of the market, um, that we can help you pursue existing loans that make it, affordable. We're going to use an example today of some clients that we've helped buy in the past that are now selling their home. We do have a buyer that would not, a potential buyer that would not but for the ability to assume their loan, even be able to look at the house, because the interest rates have just priced them, out of potentially out of the market entirely, but certainly out of the price point of this particular home. So let me pull up that kind of scenario that we put up earlier. So these folks were marketing the house at the 480 price point. So we just put down, jotted down some numbers with 20% down, which is, I'm just using a number. That number can obviously change, but it's ultra conservative in the way that you're going to save more, even potentially, more money, depending on how you structure these. And just a historical lender average of 7%, lending average of 7%. And then we interjected some property taxes and homeowners insurance. But the main number we're looking for here, if you were to keep that home over the course of 30 years, yes, they're a couple years into it, but I didn't want to complicate it too much. They're paying, over $500,000 of interest.
Mm-hmm.
Now, if we just make one simple change, and that is the buyer is able to assume that 2.75 loan, all the other numbers remaining the same, we're seeing at 180 is the interest. So that's
different.
A major difference. Now, yes, there's other factors we need to consider, such as, will you be home in the home for 30 years? I don't know if this is your forever home or not, but even the average of 6, 7, 8 years,
Yeah, it's just a matter of showing a number, right? Being able to show that there is a big difference. People stay in their homes on average 7 to 10 years, right? So realistically, you're not going to stay there 30 years, but 7 to 10 years of a 5% difference in interest is still a substantial savings. And so if you're only there for the minimum, you're still going to save a bunch of money. But the key is affordability, right? Like we've got folks that just flat don't qualify, to 6, 8 or 7 or 7.5. Like they're not qualifying, or they don't feel comfortable with the payment that comes with that interest rate, right? So if you get into a situation where you can assume, a loan at that lower rate, which is going to save you on a monthly, and you're not stretching yourself as far to be able to get into a house, that it just might make sense for you. It might give you that opportunity to make your investment in real estate.
Yeah. And, a lot of people, this particular couple were actually ones that were moving out of their existing home. They were growing out of it, and they had a very aggressive interest rate,
Yeah.
So, with, approximately doubling of their interest rate, they just couldn't make that move, right? They're getting into a higher priced, larger home, and a significant bump in interest rate. It just makes it so that it doesn't work. So this is really, but for not looking into an assumable loan, they would make an assumption that they just need to stick tight. So this is an option that, is otherwise presented by looking
and the other thing that's happening in our market realistically is that, things appreciated, right? Then rates went up, and it's kind of slowed that appreciation. So if someone, got into a government loan on the tail end of that, then the difference in what they owe and what they're selling the house for might not be as great right now as it could have been, had we not had the economic slowdown that we've experienced over the last 2 years.
Yeah.
So again, much more feasible that a loan assumption is an opportunity for you.
Yeah, and we've gone into loan assumptions in greater detail in a prior podcast. It was all about that. So, I don't want to spend a ton of time in it, but all to say, it is much more of an option than most. One, it's an option. It's much more of an option than most people would think, and that there isn't a lot of discussion around it or effort put behind finding those for you. In our space, we will actively go out and look for homes that do have an assumable loan that you might not otherwise entertain. Or if you do find a home that you're falling in love with, ask that next level question: is this potentially an assumable loan, right? You're going to buy the house already. To not ask if this is potentially an assumable loan would be a huge miss.
Right, absolutely, huge miss, and it's not just like we've spoken mostly about, people buying for primary residence, but and those interest rates are high. But if you are an investor, that's even more of an opportunity, right? Because investors typically have the cash difference, or have access to that cash difference, and investment rates are even higher than primary residence rate right now. With the pressure that Fannie and Freddie are putting on second homes and investment properties, those rates have stayed high.
Yeah.
And so, if you're an investor, that's another great opportunity. And a lot of investors are educated in that realm, but if you're new to that world, it's a great way to pick up investment properties at a lower rate. They're going to cash flow at a higher percentage. Obviously, anybody that's buying investment properties right now, typically you're breaking even or maybe a little bit more in the hole because of where the rates are at. And so you're just buying now because the opportunity and the price point is good, because the appreciation has slowed, and you're just waiting for those rates to come down to where you can refinance.
You know, you,
So
you you brought up a good point. Sorry there if I interrupted you, but we're talking about buyers and assuming loans, buyers, primary home buyers and investors, but also this helps sellers as well, because if you market that home as an
yeah,
assumable loan, you could get a much better, sales, scenario,
broadening your market, that that could potentially pick
marketable market.
for sure. Right.
Yep. Yep. So just a train of thought for sellers even, but anyway, again, just want to reapproach the idea of assumable loans and why they're important, and why our time now, not only because the rates got so low, but the time period between when the rates got low and when people are going to assume them, the difference of what that current seller paid down isn't
Mhm.
as much. So, right,
Yeah.
what I'm saying is, hopefully I can put this fairly straightforward, that if it was 10 years between the time somebody bought a home at a good interest rate and the next buyer bought it, there's a ton of
Yeah.
equity paid down, and the new buyer needs to make up that difference.
And so
So
the difference is much larger, and so yeah, might not make as much sense, right?
correct, because
And
that's
then again, to your point, like I said before, with that shortened time period, during that shortened time period, we've experienced an economic slowdown, which has slowed appreciation.
yeah.
So possibly making it even a smaller difference for you to come up with.
Yeah, if you're normally an assumed loan coming up with tens or hundreds of thousands of dollars, maybe you're only coming up with, thousands of
Yeah.
dollars. So yeah, it's a perfect storm of
Hmm.
benefit to the buyer.
Yeah. Absolutely. Absolutely.
So, well, let's chat about the other option we have here, and that is the you know the NAR settlement that we had, and I'll try to keep this fairly concise. But the gist here is that the way buyer's agent commissions are going to be paid out is going to change drastically. That will never be the same again. We don't know the exact details of how it's going to unfold, but essentially, um, what I want to get to is the database, the multiple listing service, where a seller would announce or list a commission to the buyer's agent for the buyer, is going to be removed from our database.
Hmm.
So the
Possibly.
ultimate, what's that?
Possibly. I've heard around the country of different multiple listing services that and agents that are fighting that, and they're putting it in there anyway because they believe it's unconstitutional. So there's still a long way to go on that settlement for sure.
Yeah, and there are a lot of details. I guess what I'm leading up to is, if things play out the way that it's currently mapped out, the buyer is going to be the one paying the buyer's agent commission.
Hmm.
Historically, sellers have been paying that through a co-broker arrangement with the listing agent. So they would pay the
Yep.
listing agent, and then the listing agent would, earmark a percentage of that, a portion of that, for the buyer's agent.
Right.
Now they've broken those apart, and they're going to make the buyer responsible for the buyer's agent. Okay. So now a buyer has a lot more to bring to the table in order to buy this home. What
Yes.
MHC, My Home Connection, is developing, will have, is the largest database of homes on the market or coming on the market that sellers have pre-authorized a concession to
Mm.
the buyer to pay that commission.
Yeah.
Okay. So instead of wondering, am I going to have to pay, you know, basically, X percentage of the home to my buyer's agent where the seller used to pay it, coming to a real estate brokerage that has a database, a set of options of homes where the seller has already said, yes, we're going to either pay all of or a percentage of those agent commissions for you.
Gotcha. That's fantastic. That's a big deal. That's going to be a big deal, at least for the foreseeable future, as there's all this uncertainty around that. Knowing that that's taken care of, and I don't think that, man. Again, we've talked about this before, and we can really get into the weeds with this because there's a lot that's still yet to come down with this settlement. But like it's always like it worked, right? Like it was like a pay it forward kind of arrangement to where buyers are coming up with closing costs and down payment and all of this stuff, and now you got to come up with commissions as well, and it's just like it puts a ton of stress on the buyers. So knowing, and I think a lot of sellers, like if they have a good educated agent, they're going to explain to them that, hey, you're reducing your market by saying you're not going to pay commissions. So let's figure that out.
Yeah, and I think, as with most things, it's going to bring along some bad and it's going to bring along some good.
Right.
Um, our CEO, he made it an awesome kind of analogy. It's the same destination through a different route. What he meant
Mm-hmm.
by that is sellers were paying commissions. They were paying it forward because, the next time somebody's going to buy, the sellers, they're now going to be the seller and they're going to pay, it's just kind of when
Right.
it's getting paid. So the route now is just slightly different where they've decoupled the listing agent commissions and the buyer's agent commissions. I think ultimately that's good because we have good, transparent dialogue, making it very crystal clear where commissions are coming from and where they're going to.
Mm-hmm.
I think that's good. The confusion comes into, okay, until we know how sellers are facilitating that for the buyer, where do we go? My Home
Yeah.
Connection wants to create that database where you can come to us and say, hey, I want to look at these homes. I don't have all the money that I would need plus my buyer's agent commission. Can you help me narrow down my options or even go negotiate with a potential seller to help me out?
Yeah.
So that's a value add service, that we want to bring to the community.
Well, that'll be awesome. One place to go and know all, right up front where they can shop and make the process easier. That's a great offering, Jerod. I'm glad to hear that you guys are doing that.
Yeah, I mean, we try to you can, either get better because of a problem, or you can get better and solve,
Yeah.
create a solution. So we feel like offering our clients a database of homes that have or potentially have assumable loans, as
Mm-hmm.
well as a database of, sellers being committed to helping buyers.
Yeah.
And just so everybody knows, sellers, most sellers aren't disinterested or not open to providing a concession to a buyer.
Right.
I have 4 listings currently, of which none of the sellers were not open to paying the buyer's agent commission.
Yeah.
They bought their house and that seller paid their buyer's agent commission.
Right.
So none of them even, had a concern or a problem or pushback on doing that because they're like, well, they helped me out. I'm going to help the next person out.
Right. Yeah. That's the way it's worked, right? If you own a home right now, then the seller of the home that you bought paid your agent's commissions.
Yeah.
That's just the way it was,
Yeah.
right? And there's I don't know. It's I don't know. Again, I don't want to get off on a tangent and get deep into this thing because I agree with you. There's definitely some good that's going to come out of it. I think Idaho's different though because that verbiage was already in the contracts here.
Mm-hmm.
It did bring it to the forefront, right? And so people are talking and like I'm an economics like guy, right? And I believe that I'm a purist, right? The economy is a living, breathing thing, and it will adjust itself if you leave it alone, right? And so
Yeah.
that brings that out. So now you're going to have those negotiations and like all of that, and that's all good. That is all good for the industry.
Yeah.
So that part of it is really good, and uh, we'll see how the rest of it shakes out.
Yeah, I mean, it's a little painful at first until you figure it out. But the decoupling, should it have happened before? I mean, there's other countries in the world that have had them decoupled, and
Yeah,
they work just fine. I do think that the way we've had it structured made things easier for, I don't know, commerce or, it was just
yeah.
more more
Well,
streamlined. But there is that opportunity for um, either lack of transparency or confusion is probably, a better way of what's that?
it's just I don't know. It makes me think, right? Like you talk about other countries that have it decoupled and stuff like that. I'd love to know the percentages of those countries of their populations that actually own real estate and don't rent. Like,
Right.
or because of how we're structured, has it given people more opportunity to own their own real estate, their own home, and then therefore build greater wealth, right? Like
Yeah.
for their family. And I don't know. I'd be curious to see those numbers.
Yeah. If I had to guess, we are a country of great economic, prowess and wealth, and in large part because of real estate and the way that real
Yeah.
estate has been structured to work. Not being perfect at all, but
Right.
being far better than a lot of other, systems, has created an engine, trillions of dollars a year that
Yep.
was just working. And not to say it's, some people are doomsdayish and think this is the end all, and, sky's falling, the earth is going to stop rotating or whatever. And, that's not the case. We're just going to have to figure it out. And again, My Home Connection wants to be on the front of that, to eliminate the confusion, to
Yeah.
create, make it easier for the home buyer. And then, if you don't mind speaking to Chase a little bit about the lending side, I know there's going to have to be some significant changes in how a seller would contribute to the buyer's agent commission. And I know that's not defined by any stretch either, but
I
it's
don't.
kind of, what do you
I
see?
don't know that the seller contributing is going to have to be a change, right? Because that's the process that we're used to as far as lending goes. I do believe, and this is just me talking because nothing's come down, and we won't, right, until everything is kind of shaken out. We were where we're at, right, because that's where the market took us, right? That's what made sense to get the most people buying real estate. There will be a new norm that comes out of this, so it'll be interesting to see where that shakes out. But I've heard rumblings and people talking about they wouldn't be surprised, or they've heard you know people talking about some kind of uh, avenue in order for there to be you know concessions in order for the buyer, or assistance in order for the buyer to be able to pay those commissions,
Hmm.
right? Because you think about our first time home buyers, right? We've got Idaho is so blessed to have Idaho housing and everything that they provide, and they have made it so easy for first time home buyers to buy homes in this state. Uh, but if you've got first time home buyers that are putting the minimum down, and using down payment assistance to get there, with down payment assistance and closing costs, right? And now you have to add a buyer's commission on top of that. Like for a lot of folks, it's just not feasible, and so you'll slow that first time home buyer pool. Um, and so it'll be interesting to see what shakes out. If that's where we go, and that's the new norm, that just flat buyers have to pay their own agents commissions, then I feel like we will see some change in the way that people are allowed to contribute to that.
Mm. Yeah. Yeah. That makes sense. So, I mean, there's a lot, kind of on in my head about, the intricacies and the nuances of all this. And I'm sure buyers are in the same boat. Like, wow, how do I navigate all this? This is a lot going on. And, I guess I would summarize all this with just get in touch with us. We'll talk through each aspect of this. the one thing that I did have in here is, what do we think, can you combine those two things? Can you have the benefit of potentially assuming a home loan and then, having your commission, paid out? And I guess, once the details are all unfolded, maybe,
Maybe.
they're a little,
Yeah, I mean, it does create, like, if it's in an assumable situation, if the buyer is having to pay their own commissions, it really depends on where they're coming from. Like, so in the situation, in the example that we used here today, right, they're selling so that they probably have equity that they can use to make up the difference and pay, a buyer, pay their own buyer's commission, right? That, sir, it's going to be situational, I believe. Because when you're talking about assuming a loan, it really, there's so many factors that go into it. Like, what's the difference between what they owe and what they're selling for? How much is that buyer making up? So there's already a chunk there that they have to deal with, and then adding, buyer's commissions on top of that. It will make it more difficult, but I do believe there's situations where it'll still work.
yeah. Yeah, well, a little bit of a shameless plug here. We will say you can combine these opportunities with our perfect home buying process. We're not going to,
Yeah, absolutely.
you know, so if you want to, look into
Credits
buying a
always
home,
help, right?
what's that? Always help?
Credits always help.
Right, right. Yeah. So again, Chase talked about the cost associated to buying a home. We here at My Home Connection always recommend inspections, even for brand new construction homes, and we've gone into detail about that in prior podcasts. But we want to help out with that so that there's never a potential pushback on not getting a home inspection. And then, of course, the appraisal, if you're going to, finance a home, sometimes they're waived, but most of the time you're going to have an appraisal. And, Chase is, in some, it's willing to help out with that. So, yes, on some parts for sure, and other stuff is
Right.
a little bit remaining to be seen.
Yeah, absolutely, absolutely. I will say though, what are your agent and your lender doing? Like, are they looking for these opportunities and situations to help you get into real estate? Make sure you're with the right people that have your best interest in mind. Always.
Yep.
It's not about, find some folks that it's not about all about, the money they're making off this deal.
Yeah.
I speaking for Jerod, I know that he leads with gratitude, and he's always looking to serve and give. And so I know that he will have your best interest in mind.
Oh, thanks. Thanks, Chase. I really appreciate that. And you're the same boat. We're like-minded. We've been serving our mutual clients for years. Like we said, we just went through a scenario. Folks, we helped buy the home, and now they're selling the home, and they honored us with helping, in that process. And we're coming up on the half an hour mark, but you said something that I think is very important to just touch on, and that is the one thing that I think this NAR kind of settlement and how this is going to work is it brings to light what value a buyer's agent is bringing to the table or not. When a buyer is now, when the commission is decoupled, the buyer's going to have to say, is this agent somebody that has my best interest? All the things you were just talking about. Are they bringing value? Do they have my best interest in mind? Can they negotiate? Do they have the experience in the industry to help me, avoid pitfalls and or look for opportunities? So I hate to say it, but the buyer's agents that are not going to survive in our industry are the ones that either don't have value or can't articulate their value to their customer, because now that's a conversation that is now going to be had almost all the time versus before was seldom had, because it was easy to say, hey, don't worry about my commission. That's committed to by the seller.
Well, that was a sales tactic, right? Like, you didn't have to separate yourself. You did not.
Right.
So,
right.
And I love it. Honestly, I love it, Jerod. I'm an
Yep.
old school sales guy. Like, I am, I've been in sales one form or another for more years than I'm going to say, because I don't want to date myself on camera here. But
Yeah.
but it's awesome, because I think generationally we've gotten away from that. We've gotten away from those skills. We've gotten away from how we speak to one another, speaking to one another, belly to belly across the table and showing what value you provide and building relationships. And so I think the agents that have that skill set still and that know how to build deep relationships and know how to add value to their clients, they're going to win big. They are definitely going to win big.
Yeah, well, and I find it interesting, and I'm going to try to word this correctly if I can, but that's been our philosophy all along. And part of the development of the perfect home buying process was articulating our value because it set our mindset, our mission, our vision. And real quick, just looking at the things that we've built into here was just simply the process of us putting it out there, to the buyers. And, again, we're blessed to have already had that kind of, spelled out. There's a lot more than just that, but I don't want a multi-page, slide. So we were able to kind of get ahead of that. And I'm just communicating, even if it's not us and our team, Chase and his team, make sure as a buyer that you have that conversation with your agent. How are you representing me in this process? What do you bring to the table for me? Because, interestingly, there is a monetary value associated to that.
Absolutely.
And if an agent can't justify that monetary value, whether it's coming from the seller or coming from you, they're probably not a good fit.
Yeah.
So anyway,
everybody has to earn their value, right? Like they have to show what they're worth. And yeah, it's deep, like you say, separating those things have brought that right to the forefront, and the better agents are going to win.
Yeah.
So if you don't feel like you have that skill set, go get it, because you're going to need it at this point, right?
Yeah. I mean, we are a growing team. So if you want to, anyway, I don't know if I want to go down that path, but one of the things we also love doing is helping agents grow, their business and their maturity and their professionalism. So anyway, but hey, Chase, tell us a little bit about your resources on your website, people, how folks can find you and what they have access to.
So it's just Summit Funding /C Hodson. Just search that and I'll pop up there. There's a number of different calculators that you can use there. You can fill out the app there. You can contact me through that. And it's going, I'm undergoing a little bit of a makeover now. So we'll see how it looks in the future here in the next couple weeks. But anything you need to know is right there, easy to get to. Awesome. My cell phone number is on that page as well. So feel free to reach out if you have any questions.
Awesome. Well, good stuff. As always, we appreciate you, co-hosting the show and bringing the lender perspective, the lender lens to everything, because there's a lot.
Yeah, there's a lot, and I can never reiterate this enough. I know I've said it 100 times. There is a lot that goes into a real estate transaction, and you for the vast majority of the public, you are fooling yourself if you think you don't need professionals there fighting for you. So,
yeah, and anybody that's been watching our podcasts in the past, we probably beat this, dead horse repeatedly. But I think it's always worth restating is the way that the home buying process is set up today. Usually, the professionals are brought in at the tail end of it. I've found the area, I've found the home. I think I've got all the information I want. And then now you reach out to us to make sure we can buy it or get us in the house. And maybe you're spot on.
Mm-hmm.
But in our experience, people are either a little bit off or a lot off of the mark, because they either could have been polishing up their credit a little bit or putting some reserves aside or structuring things a little different, or missed something on their credit that they didn't even take into consideration. And now all that time, effort, and energy and excitement, enthusiasm about moving into a different area, bigger house, whatever it might be, goes out the window. So just please find some professionals sooner than later, get them involved, make sure you're doing it right.
Start early. Definitely start early, because like to your point, people are generally off quite a bit.
Yeah.
with whether it's payment or, just the area, the neighborhoods, the schools, the everything else, right? The professionals can help. They
Yeah.
can help a ton. They'll save you a lot of time and a lot of heartache
And
and
maybe
put
a
you.
lot of money.
That's right. That's right.
Anyway.
So
Well, all good stuff, Chase. Well, we did go over a little bit today, but not as bad as we have been, so we're doing better.
expected at this point.
Yeah, maybe we should have a hard stop and see a countdown so that it just anyway,
Yeah.
that's good.
Oh,
There we
here
go.
comes.
Bye for now. Anyway, thanks again, Chase. Other than that, we'll just wish everybody a blessed one. Take care.
Yeah. Have a great week, everybody.